Let's get to futures in focus. Gold sliding for a third straight day. Investors assess the likelihood the next Fed chairman will be more hawkish. WTI climbing back above $52 a barrel. Joining us from the CME to discuss, Todd Colvin of Ambrosino. Todd, how are we positioned? How should we be positioned ahead of the oil inventory data in roughly 19 minutes' time?
I think that the oil inventory data has already been priced into the market. They're expecting to see slight declines. I think overall that the numbers that we've seen here in oil have been supportive of higher prices. But the real one that stands out, I think, is not the tensions we're seeing in the Middle East. Those come and go like the wind. I think really it's the demand, the rising demand expectations component that we're hearing out of the Middle East. That is what's going to keep oil prices on the rise here as long as OPEC can maintain those production cuts beyond what their current settings are.
And if OPEC, Todd, does extend those production cuts, what's the upside for oil?
Well, I think right now the upside, 54 is going to be a tough level to get through. Not only has that been a technical resistance, but also it's going to bring in a lot more producers. So when I talk about the production cuts kind of being status quo, it's where that demand component is going to help offset rising production and exports in the U.S. as well as in Libya and Nigeria. So there's a lot of reasons here. And if all those pieces don't come into place, don't be surprised to see oil prices decline back towards 50 despite extension of the oil production cuts.
Todd, gold is certainly waking up from its summer slumber. Is volatility back in the market?
Boy, I wish I could say yes to that. In moments, we see volatility. And in gold pricing, we've seen a rapid ascension from, mid-August levels of 1275 back to mid-September up around 1260 or 1360 back to where we are now. And I think a lot of this is about a position move. Yes, there are tensions, and yes, there is defense inherited in gold pricing, and it's got a bit of a dollar component as well. But the dollar's been sliding really all year, so I don't atone for that as right now as to why we're seeing the price action we're seeing. I think right now this is about Fed policy, and this is about the U.S. government and confidence in the dollar. And right now it's still waning. Even though it's off the lows, it's still waning. And the gold shift we've seen has been a liquidation trade from the highs. I am still bullish gold here, despite the moves we've seen, until we get a trade well below 1275. So right now, it's been a tough trade to hold on to. But if you've been adding longs on the way down, I think you're going to be well rewarded when, if and when the Fed chair comes out and volatility comes back into this market.
Yeah, and on the issue of the Fed chair, Todd, where's your money? I mean, who do you think it's going to be?
I think that the early money went on former Governor Kevin Warsh, and now I think you're starting to see money shift over to current Governor Powell. I think he's an extension of the current administration, the current Yellen administration in Fed policy. I think Warsh brings a bit of hawkishness that would be, I think, a little bit more volatile to the markets, maybe something that the rates market has been searching for. I think that's right now, it's a two-horse race, I think, between those two. I think Yellen, after her Jackson Hole speech, sort of said farewell to the Fed.